some really good trades, and yup, let's just get into it. Right now, we could see that Bitcoin is back to $17,739 after getting a nice little pump today and yesterday, as you guys can probably tell. Off the CPI news, we got some lower CPI than expected, and then we rallied to 17,700, and then from there, today we rallied up as high as 18,330, or basically 18,400, before ultimately reversing back down and losing all of those gains today. Now we're starting to see a little bit of red, some downside right now, and again, we could be potentially forming a bit of a bear flag pattern, as you guys can probably tell from this high all the way down here. And then eventually, if this pattern breaks towards the downside, then we could potentially see 12,000 to 13,000, 14,000, depending on which support level we're going to hit first. Obviously, you guys can probably tell we tagged that 300 weekly moving average. This is the 300. Yes, this is the 300 weekly moving average perfectly today. And we're gonna have to see how this weekly candle closes, but ultimately, if we don't get over it, we just tagged it, we could very easily keep moving towards the downside. Moving on, let's take a look at oil. Oil rallying as high as $77.83 today, and now we are getting a very nice pullback, as you guys can probably tell from this major trend line I've drawn here. Again, I've already had this outline before, but just to reiterate, you guys can tell you guys can probably tell that this level right here acted as support. And sorry if my nose sounds a little bit stuffy right now. I am a little bit sick, and yeah, just gonna be taking some vitamin C's from now on. But yeah, overall support, and now we broke the support, and now I expect it to flip as resistance. So some very basic TA for you guys right there. But ultimately, we're gonna have to see if the price respects this trend line that I expect it to do, and so far we are respecting it. Again, today the Fed coming out announcing a 50 basis point rate hike. Markets were rallying, floating up, expecting potentially maybe 25 basis point if Jerome Powell was feeling it, but overall clearly wasn't feeling it. We pumped up to this major trend line once again, respecting it as major resistance and ultimately coming back down. And then he followed the statements by saying that the rates would potentially stay higher than expected. The rates would have to go higher than he expected, and they're going to have to stay higher for longer. And again, this is bearish. This is not good news. The Fed obviously wants to make it seem like they're trying to fight inflation. The inflation that we saw that was reported on Tuesday was mostly tied to crude oil and energy prices going down, but again, wages, which is a very big focus of the Fed right now, which is very, very sticky, keeps increasing, and then we saw food prices increase as well. So it's not like the actual real inflation that there is going down. Oil can fluctuate up and down. Obviously, it's been coming down because of recession fears, but overall, I still expect oil to come down to 65. So you might even see the CPI come down even further in other reports, but it doesn't mean that other metrics are going down. Now, as for the remaining trend of the year, I expect that the S&P 500, the Nasdaq, and the Dow Jones, and all the other indices like the Russell 2000 are mostly going to either chop sideways or going to have a bias towards the downside. Again, economic news right now, like bad economic news, is quite positive for equities. Equities will rally on bad economic news, but heading into 2023, I expect bad economic news to actually be, bad news, because eventually the Fed will pivot, but they're only going to pivot because things are going to be so bad. Like earnings are going to be awful, unemployment are going to be like through the roof. You're going to see maybe 5, 6, 7% unemployment. And then by the time the Fed pivots, unemployment's already going to have, it's going to be in a big trend. And then you're going to see a lot of companies start to lay off a lot of people. Right now, it's only like it's affecting the tech sector. But once you see major financial institutions, major conglomerates start to lay off by the masses, then that's when you're going to see the Fed pivot. But for the time being, the Fed is just gonna play chicken with us as far as interest rates go. And I think that there was like a tweet recently about some news that Jerome Powell is expecting a 75 basis point rate hike for the next FOMC meeting. So we're gonna have to see about that. But overall, if he's gonna get even more hawkish, then that's gonna be a problem for the equities. And I think the equities trying to front run the pivot is kind of a joke, because I think that the equities need to give up on the idea of a pivot, and then they will get the pivot, because trying to front run a pivot won't work. And actually, you guys can see that we actually broke out of this rising wedge right here. We basically came back up and retested all pretty close to this line. I guess you could adjust it a little bit. This was just crudely drawn from me on I believe my Monday video. If you guys enjoyed the video, feel free to leave a like and subscribe. And if you guys want to join the Discord, it is free with the link in the description. Feel free to join and be part of the community, guys. We have a bunch of traders inside the Discord putting out free trades for everyone all the time in the free trades chat. And again, if you guys want to see my trades, you guys can become gold members and get access to that daily analysis as well. And now let's keep going. Let's take a look at Apple, because Apple earnings are going to be coming out in January of 2023 on Thursday 26th. So it's going to be pretty grim, according to a lot of Discord members inside of my Discord. But I agree with them as well, because Apple has been going through the ringer right now with China back and forth with their production, and iPhone sales are not doing that great either. And we saw the earnings that came out in October wasn't so bad after all, but we're gonna have to see how this Christmas season, how the Christmas sales were in January. Moving on, let's take a look at a couple other things right here, such as gold. Gold is actually forming a bit of a bearish divergence. As after all, we made a nice little higher high right here, 1825, making a lower low on the RSI, hence the bearish divergence. And we have another rising wedge, which is quite bearish. And I actually expect this to break, and we could potentially come back here and retest 1724. If that doesn't hold, then your next major level of support is going to be coming right here at 1680. And we have our infamous or famous, whatever you want to call it, triple bottom right here. Why did my thing copy paste all the way over there? Okay, right here, 1620 is going to be your triple bottom level right there for gold. But again, my major target that I have for gold is going to be right here. I'm going to make this green for you guys. Right here at 1500. Oh, sorry, not 15. It's actually 1450. But I do have another level that I'm looking at right here at 1550, which is basically begin with this these tops right here, as you guys can see, resistance, and then we've basically flipped it as support. And then obviously you can negate the COVID crash, because that was a massive crash that happened. Oh yeah, you can take a look at these levels right here. But yeah, that COVID crash basically broke all trend lines, all support lines, all resistance lines. Everything was negated during that crisis. And yeah, let's keep going. Just a couple more things I wanted to talk about right here. DXY, you guys can see that the DXY today took a little bit of a hit. We're seeing some green right now, but ultimately you have a major support trend line right here, coming in right at 101.82, spot 82. But if the dollar keeps falling, then you can expect equities to keep rising up, or at least trend sideways. If the equities rise up, like the S&P 500, then for me, my absolute top that I could see for the S&P would be right around 4,200. If we get over that, 43.29. But overall, I think 4,200 is going to be the nail in the coffin for the S&P if it rallies to this level right here. Like, you can take a look at the Dow Jones, how overdone it is on this bear market rally. Same thing for the Nasdaq, same thing for the Russell 2000. And the Russell 2000 did actually break this channel that we are in, but didn't confirm above it, and we just chopped sideways, and now we're getting some wicks above it. We're still underneath that 200-day moving average, proving to be a significant amount of resistance. And if we start to roll over once again, then you got your major supports coming in right around 1635 for the Russell 2000, which is basically your double bottom right there. Overall, things are not shaping too good for the economy, and they're not going to get any better headed into 2023. hopefully you guys enjoyed this video. We're going to have a Christmas giveaway. That's gonna have to be announced in the Discord, or I'm gonna make a post on YouTube as well, my YouTube channel post, my community post. So I'll keep you guys updated. But every member is free to join that giveaway, and you guys can actually come inside the Discord, because we're actually having another little bit of a competition for you guys to win up to 100 XRP and 500 hex. If you guys can predict the Bitcoin bottom, just come in and post your Bitcoin price prediction for the Bitcoin price bottom and the Bitcoin bottom date. If you can get the date, you actually get the bigger prize, which is 500 hex from our one and only Logan inside the Discord. And again, big thank you to Logan and Ben, because these two guys are actually the two guys that are going to be donating to the Discord. And yeah, feel free to join. Links in the description. And if you guys trade crypto and you want to see my trades, feel free to become gold members. Love you guys.